Are you ready to make some fast profit scalping boom and crash? In today's video, I'm going to show you a powerful scalping strategy using the stochastic indicator. This strategy is simple, accurate, and perfect for quick entries and exits. Stay with me as I guide you through the step-by-step process to achieve a good trade. Today we're going to be combining a little of price action and indicator. Okay, we're not just going to use just the indicator, we're going to do confirmation with our price action. Okay, we're going to be talking about scalping. So when you're scalping, all you have to do, this is boom 1000, and if you want to scalp on boom, you have to make sure that the trend is on a downtrend. Do your confirmation from the higher time frame to check the current trend, if it's bearish or bullish. Okay, we're going to be using the previous activity of price for explanation, so we can't be waiting for present action. Okay, so now what you do when you come to your charts, if you want to take a trade, we're going to be working with the 30 minutes time frame, the 15 minutes time frame, and the 5 minutes time frame, and probably you can also get an entry on the 1 minute time frame. Okay, what you have to do is to ensure that this time frame I just mentioned, they align with each other, that they should all be at the overbought level. Okay, that is the 90 level or above the 90 level, so they should all be at the overbought level for you to take an entry. Okay, now we're going to be focusing on the 30 minutes, the 15 minutes, and then the 5 minutes time frame, and probably the 1 minute time frame. So on the 30 minutes time frame, what will you be looking at for? I'm going to be looking at for exhaustion of buyers, which can signal possible reversal. Okay, and how do you identify the exhaustion of buyers? You identify it through rejection of candlesticks. Okay, appearance of wicks at the candle. Okay, multiple rejection or even a single rejection. Okay, depending on the time frame. You also identify it with presence of chart patterns, okay, or candlestick patterns. Okay, so but we are going to be looking at rejection and candlestick formation, so that is what we're going to be looking at. Okay, so this is presently the 30 minutes time frame. So let's say, for instance, we came on our chart and we met price at this level, okay, forming the candlestick rejection at that zone, at that resistance zone. What do we look out for? We look out for what? Rejection of the candlesticks. Okay, when you look closely over here, now when you look at the resistance zone, what do you see? You see rejection. Can you see that? Can you see the long wick of that candle? Okay, and even the previous candle, can you see the rejection over there? So you can see that there was rejection, and this can what signal possible reversal, and you have to what mark out that zone. You mark out that zone at with that resistance zone at which there was rejection. And what do you look out for? Again, you check if there was a new high that was formed. Okay, when you see that, when you look at it, you see that there is no new high. Okay, you can see high here, you can see another high here, and this is another high. And if the trend was going to continue, there's going to be another what? Higher high. Okay, but when you look at this place, you can see that price failed to form a new high. Can you see that? Price failed to form a new high. So this can signal what? Reversal. So what do? You mark out that zone. So let's go ahead and mark it out. So I just use the rectangle tool to mark out that zone. Okay, so I just mark it out, and then we're going to head over to the 15 minutes time frame. We're going to head over to the 15 minutes time frame to see what that zone looks like. So this is what the zone looks like at the 15 minutes time frame. Okay, remember we are working with previous activity of the price, and we are trying to get an entry. So when you meet price and you see rejection, of the candlesticks, you see candlestick rejection. Okay, you see the wicks appearing, you mark it out. Okay, we're going to place a mark at the low of the candlestick, okay, that failed to form a new high. We're going to place a mark. Okay, let me just draw a line below. That's going to be our entry point. Okay, so I'm going to mark out the low, okay, of the candlestick that failed to form a new high. Can you see that? So that's green candlestick that failed to form that bullish candlestick that failed to form a new high. Okay, this bullish candlestick that failed to form a new high. So I marked out the low at the 15 minutes time frame. Then after doing that, I'm going to head over to the 5 minutes time frame. Okay, so here is it on the 5 minutes time frame, and this is where we're going to get our entry. So after marking out the low of the candlestick that failed to form a new high, okay, we wait for price to break that zone. When price break that zone, we enter and we're going to ride. Okay, now where is that point? So where is the point at which price broke that zone? Now look at it. Okay, so when there was a spike, okay, let's say there was a spike, we mark it out. We mark it out because the spike failed to form what, a new high. Then we wait for price to start trending down. Okay, and when it trend down and breaks this black line, this low I put, so when it breaks through this black line, I open up a trade, okay, and then I ride massive profit down. Okay, so that is how to get an entry using this strategy. Now I have explained it without depending on any indicator, okay, but we are going to be using our indicator for confirmation. So this is going to help the beginners to be confident. It's like your second opinion. So if you're not confident enough with your analysis and you need a second check, your indicators are going to help you for your second confirmation. Okay, so now we're going to set up our indicator, and the major indicator we are using today is the stochastic, okay, stochastic oscillator, and that is the major indicator we're going to be using, and we're going to be adding it to our indicator window one and use it for confirmation. So let's go over to our indicator window and set up our indicators. If you are serious about improving your trading skills, I've got something special for you. I would love to invite you to join my free Telegram community where I share exclusive educational articles, practical tips, proven insights that will help you trade more profitably and avoid the common mistakes most traders make. It's not just another group. It's a space to learn, connect with like-minded traders, and get real value that you can apply immediately to your trading. So go ahead and click the link in the description of this video to join us today. These are the indicators we are going to be using today. On main chart, we have the moving average, okay? We have the moving average, and on the indicator window one, we have the stochastic oscillator, and we have the relative strength index, your RSI. So let's check out the setting of the moving average on the main chart. Let's open it up. Okay, so this is your setting of your indicator on the main chart. Okay, the parameters are period 8, shift 0, method exponential, apply to median price. Always take note of that. And then you go over to the levels. There are no levels. And then the style, you can choose any color of your choice. And then you click on save. So now let's check out the setting of the stochastic oscillator. So the stochastic oscillator, these are the parameters, okay? So you have your K period 70, you have your D period 2, and you have the slowing to be 2, and you have the price field to be close, close, close / close, and then the method is linear weight. Please take note. And then you have the levels to be none. There are no levels. We are using the level of the RSI, and then your style should be your background color, okay? Your style should be your background color, and after that you click on save. So the next indicator is your RSI. So we have RSI period 5, apply to typical price, and then we have the levels, level 10, 90, and 100, okay? And then the style should be your background color, as we don't need the colors of the style, we only need the colors of the level, and then you click on save. So let's check out our indicator on the main chart and see how it looks like. So I'm going to pull up my indicator window right now. Okay, so this is what we have on our indicator window. You can see that the stochastic oscillator aligns with the action of the price on the main chart. Okay, so while we wait for price to come and break our entry level right here, okay, while we wait for price to come and break our entry level right there, we also check the indicator to see that it has reached the overbought level, okay? It must cross the 90 level. This black line you see here is the 90 level, and ensure that the stochastic oscillator has crossed it, it goes above it and then returns, it starts trending down. Okay, then it touches what? The 90 level. Right there, when it touches the 90 level, that is when you have the break on what? The main chart, the break of that level on the main chart, and then you will enter right there and then ride massive profit down. So this is how to use the strategy. It's easy and it's simple and is beginner friendly. So I just hope you understand. You have to back test it, okay? And also you have to back test it. Back test it when you're confident enough, then you can what? Take a trade. Now let's look at another instance. If truly when these conditions are met, we can actually get an entry. Let's check out another condition. We are back at the 30 minutes time frame. Let's check out other conditions that was met and see what happened next. Now look at here, over here we have same thing happening at the 30 minutes time frame. Okay, no new high was formed. Can you see that? And there was candlestick rejection and an appearance of a doji. Okay, there was an appearance of a doji. I believe you know your candlesticks formation and their interpretation. If you don't know it, just type in the comment section that I should make a video on candlestick formation and their interpretation. Now let's look at over here. You can see that exactly what I've explained initially. That's what happened over there. There was rejection. Can you see that? There was rejection, and then we had a bullish spike that failed to form a new high. Okay, it failed to form a new high. So what do? You mark out the low of that candlestick that failed to form a new high. Okay, so I'm going to mark it out again. Okay, so I mark out the low at which I mark out the low of the candlestick that failed to form a new high. And when I look at my indicator window, I can see my stochastic oscillator also was reached the overbought level. Can you see that? It reached the overbought level. And then what happened next? It started what? Trending down. And also, while waiting for the break of this level, okay, while waiting for the break of this level, you will have to also check that the moving average on the main chart has crossed over to the other side. Okay, you have to make sure that it has crossed over to the other side before taking your entry. Now when we step down to the 5 minutes time frame, you are going to see what happened there. So this is the 5 minutes time frame. You can see exactly what happened here. Now look at this. Look at this. Look at where you get your entry, guys. So this was the initial high, and this was the spike that failed to form what? A new high. We also have a little one that failed to form a new high, but this right here was the one in the 15 minutes time frame that failed to form a new high. And thereafter, what happened next? The moving average crossed over to that side. Can you see that? The moving average crossed over to that side. You don't enter yet. You wait until what? Price breaks this level. So as soon as price breaks that level, you enter and then you ride massive profits down. And when you look at your indicator window also, you can see that it also reached the overbought level and then price starts trending down. Can you see that? Price start trending down, then you enter and ride massive profit down. So this is how to use the strategy. Is a combination of what? The stochastic oscillator and then your price action knowledge. So I want you to use this strategy to milk your broker and make massive profits out of the market. Now for those of you that do ask of what zoom level, you can actually use this at any zoom level. Yeah, you can use it at any zoom level. You can see when I zoom in, it's still the same thing. When I zoom out, it's still the same thing. So you can actually use it at any zoom level, depending on what you are comfortable with. Okay, depending on what your eyes are comfortable with. So if you got value from those videos, I want you to hit that subscribe button, like this video, share it, and drop a comment in the comment section the next strategy you want to see. Thank you for watching. Bye.